everybody, welcome back to Royal Blu FX. In today's video, we're going to go over some of the few trades that we've taken last week Friday. I believe that was August the 19th. We've had an amazing week last Friday, and I could say that Friday was really the icing on the top of the cake. Also, if you're new to this channel, please subscribe to this channel because we always offer free content for anyone. Obviously, this helps us to generate more and more content for you guys freely, because if you weren't subscribing and nobody was subscribing and nobody was viewing our videos, then our channel would pretty much just die. So without any further ado, let's begin. For those of you that are new to this channel, we always start on the 15-minute time frame as our higher time frame, as our directional time frame, and we work our way all the way down to the 5-second for the entry. All right, so as you can see here, we're on the 15-minute time frame. We're always trading the US30 index. I start on the 15-minute time frame like this. I look for the direction. So far, I understood that we had to break a structure right over here from this low. Right over here, okay, this low was broken, and therefore we mapped out where our potential order blocks would be. Right over here, as you can see, there's a high, right? There's a low, and there's a high, and there's a low. So we mapped out this one because we believe that this high here broke out this internal structure right in here, as you see, okay? And then we obviously waited for the price to see what may happen here based off of its direction, right? Since price was going bearish here, we were just seeing if this low here would push and retrace all the way up to this area, to the supply zone, because we had our main break of structure broken. So we wanted to ask ourselves, who broke this low? It was this high over here, okay? And then potentially we had other highs. Potentially it was this high too as well over here that we marked out, but then we thought to ourselves, you know what, we're just going to play order flow based off of how the market is moving here, of how price is breaking, you know, and then breaking and then mitigating, breaking and mitigating. It's all showing us a lot of supply coming bearish, but nothing is mitigating just yet. Okay, so let's go zoom into here. I'm going to show you guys what happened. We were here at this point in time when price came up. So what I was trying to do here was I saw that we had a chalk to the upside, right? We had a chalk like this. The low and the high have to be broken. So you can see that the low was broken, the high was broken, right? But just because we have one break of structure doesn't indicate that price should be changing the direction completely. We were following our internal structure. Let's go down here. So I went to see what was happening here because we had this main structure broken, right? Let's go down to the 1 minute. Our 1 minute is our behavior time frame, and we want to see the behavior change, right? We want to see it go from rather from bullish, we want to go at bearish. We want to see everything go bearish here. So I was also playing the open of the New York session, which also means right when New York opens, right, I know where price should indicate in terms of where it should sell or buy, you know, where we should be entering precisely. So I looked at this order block here. That was the last up candle, or the last up move before the bearish trend push bearish. I also looked up these other potential order blocks, like right over here. You can see that we have order flow pushing bearish. There's a break of structure here, right? And this low here, this high was responsible for this break. Then we followed order flow from here, where we saw who broke this low here. It was this high. This high was unmitigated right over here, as you can see. I don't know why it's right there. So it's right there, right? We have a buy to sell candle. Let me zoom in quickly here for you guys to see. We have a buy to sell, right? And then it was mitigated just by a hair, but sometimes price comes in and fully mitigates it, you know, to the 50% equilibrium. So that's why I had this as a potential area where price would come and mitigate. Okay, so once price got all the way over here, this is the juicy stuff here that I know you guys want to see. Right, once we got here, right, the behavior, I wanted the market to switch bearish, right? What happens is price came and mitigated this area of supply, and then I immediately went down to the 5-second time frame. Now, we know that the behavior changed, right? We have a chalk. This is the first sign that price is reversing, or at least showing us that there's an intention that price wants to go bearish here. And then once price was here, I want you to look all the way down here where it says 1429, like 1429 right now, right? And then once price trended to 1430, 1430, like right around here, right? It's where I took the trade, right over here, as you can see, right? This is when I knew price was going bearish immediately. So you might be thinking, well, why didn't you catch it right at this high, right? Well, that's because price hasn't taken out the liquidity from this high, and then once price went bullish like this, telling you that price is going bullish, right? Because we were still in an area of supply. I immediately knew the price was going to change direction. I had my, as you can see, my Fibonacci tool here ready to go, right? And all I was waiting for was price to make a bearish move here, and then this is when my sell happened, like this. So I'm playing literally the New York Open as soon as price opened here at 4:30. 4:30, excuse me, not 4:30. It's 14:30, but it's 4:30 p.m. here in Moscow, Russia. So I literally took a sell here, targeting the slow. The reason why the slow is because we already had a break of structure here. As you can see, we had a chalk. We were asking who broke that chalk. Obviously, it was the slow here. The slow was responsible for that break. So we had this at the minimum to target this low because we didn't know if price was just going to, you know, bounce here and then push bullish here and breaking a new high, right? Hence this trade here that we were looking to buy off of this low here, right? So once we took the sell off, we immediately just targeted the slow as a safety precaution, right, and as a safety exit. Normally, when you're trading, you want to have it's really important that you know where your entry is, obviously, and where your exit. Your exit is just as important as your entry, because a lot of the times when you're entering the markets, you can obviously be quite intimidated by not understanding and not knowing where the market's going based off its, you know, behavior. If prices are moving like this, right, prices go up and you're like, oh shoot, I should exit now, and then all of a sudden price go bearish and you're like, oh shoot, I should have held, right? So it's equally as important to know where your exits are and where your entry is, just as your entry is, obviously. So you might be asking me here, well, why are you taking a buy here, right? Shouldn't you wait for like a confirmation, a chalk confirmation? Yes and no. There are two scenarios. It really depends on the setup of the market and its structure. I understood here that this is my buying opportunity, so I always put my Fibonacci tool like this, right? Always go around the 50%, sometimes at the open of the Fibonacci over here from this zone. Fortunately for us, here you can see price dipped right below the Fibonacci, the 50% equilibrium here. So I just took that entry based off of that area where price tapped that equilibrium line, and then we took this buy, holding it to this high here. The only reason why it was this high and not anything above is because this is a safe target. We are still generally in a supply zone. The supply has never been broken, right? This high has never been broken, so we are only looking to target this high. My other potential area to exit was a potential supply zone like so here, like right there. Although I didn't mark it out, I was just paying attention to it, and this is where I would have been able to exit. But thankfully, price was just going smoothly, right? You can see where's the supply zone, the market respected the supply zone, right? Push bearish, but didn't actually break below this low here. So we knew that order flow was still bullish here. It was respecting the order flow, and so we took that supply zone and we just kept moving forward, knowing that price should continue bullish. And there we go. You can see that we TP'd on this one. We broke, excuse me, we TP'd on this trade here. You can see that we had a 5.4% bearish, and here we had an 8.7% bullish here. So we are standing very well with our percentage rate over here. And to some of you guys, obviously, you know, hitting multiple trades like this, you know, let alone hitting so much percentage within, you know, the 5 seconds or within a day is too much. Sometimes you probably get about 2 to 3% per trade, right? At Royal Blu FX, we get roughly about, I would say roughly about anywhere as low as, or minimum is 15 to 20% per day, and up to anywhere as say 70, 80, 100% per day. It really depends on the occasion and the setup and the structure of that day of the market. All right, so let's continue forward. Once we see that there was a small break of structure to the upside, we knew that this could be just a liquidity grab. So we kept watching the market. We knew we weren't just going to be, entering sells and buys. We want to make sure to see what the behavior, what the market is giving us in terms of behavior. We know that the 1 minute is our behavior. We scaled up, we actually scaled it back to the 5 minute like this, just to see, okay, what is actually happening here. We had two options here. As I mentioned, we had two supply zones, one being this one, where price was going to react and go bearish fully, or we were going to have this extreme high over here where price is going to tap and push bearish fully as well. Obviously, you may also be asking me as well, okay, if you knew that this was a huge sell, why didn't you just enter like this, right, with a risk above like this and TP below like this, right? Well, the reason for that is because I know I'm better than this, obviously, right? What we do is we scale down to lower time frames like so, and we try to find our best entries, the best entries here from the lower time frame to minimize our risk, because risk is very important when we play our the markets, right? So yeah, so once price tapped here, I really wanted to see what was happening. You can see the, I'm sorry, I'm on 30 seconds now. I was scoping this on the 5 seconds. I knew this is my supply zone again. I saw that we had two breaks of structures pushing bearish here. So I was already convinced that price should go bearish, right? When we get two or more breaks of structures, that confirms that the trend is indeed going in that intended direction. That's creating a trend. Right, you can see here. You might be asking me, okay, then Royal Blu FX, why did you sell from here and target the slow here? Well, that's because we have a break of structure. This is a confirmed break of structure, right? We are pushing bullish. There isn't any intention of the price going bearish yet because we haven't broken this low. If price broke this low, we would look for more bearish opportunities, entries here. Okay, so at this point in time, we were just looking to target this low here because this was a safe demand zone. Price, you can see, just left off here, never mitigated anything, right? Never mitigated any of the demand zones here. So we took this sell once price broke. We had a chalk, then we had a BOS, and you can see we ask ourselves who broke this low. It was this high. We took sell here and trusting the process, and we were really just holding this trade until price get this to this low. It's very important that you hold. It's very important that you pay yourself when price is. When you've entered the trade, right? It's very important to just pay yourself. We pay ourselves anywhere from 3 to 5% depending on how the trade is reacting, and then we just let the rest run and let the market do whatever it needs to do from here. As you can see, price has TP'd here, and then we were very glad about that, so we took all our money out and exited the trade. All right, so this is all really just rinse and repeat, rinse and repeat. We're really trying to see that the market is in fact doing what we're looking for it to do in terms of just the behavior, right? Anytime we have a break of structure, we have a protected low, right? There's a weak high, weak low, and now we're looking for prices to go bullish here, right? So we had another confirmation here. We had a chalk here. We had the extreme high of this high and this low, and we had the internal structure here. You can see the internal structure was broken right here, right? And so we thought to ourselves, okay, well, this is a safe entry for us. So we took this entry, or did we not? No, not yet. We haven't taken it yet. So as you can see, price broke the main chalk right over here, the main structure, right? And then we were looking for a buy from here. And then once price got here, right, it tapped us in like so, right? And then I told myself, okay, well, now we're just holding it to this supply zone. The reason for that is because we were still in a major supply zone that was still reacting off to the market going bearish, but we were, as you can see, the order flow on the 1 minute, if we go on the 1 minute here, you can see that the order flow was pushing bullish here. So we had no doubt that this should be a buy here, right? Once we took a buy here, I want you to see what happens. Okay, we lost this trade. We didn't break even. All right, it was too quick for us to even break even. It's too early for us to even indicate that this should be a break even trade, only because of how low the trade was when we entered. Right, when we entered in, we had to make up that spread for the brokers. Obviously, the spread is always 4 pips. It's always 4 pips. It's never a pip or 2, right? Because this is a index that we're trading, so there's a lot of volume traded in here. So therefore, the pips are normally high for indexes. Okay, so let's zoom out okay. So let me just tell you why I lost this trade. The reason why I lost it was because another thing. What I always think of is when we're trading is that not everything should be tradable, right? Sometimes you just need more confirmation than just one break of structure like this. We had sort of we had a buy and a sell happening here, right? We had where the 1 minute's order flow was pushing bullish. We also had supply pushing bearish. We had this low breaking this high, so there wasn't any guarantee that price should go bullish from here based off of this supply zone. And another thing is that since we're dealing with a supply zone here, right, we should sometimes just say to ourselves, we need to wait for a clean direction here. We need to see a clean break here at this low, or a clean break from this high to see if we can break the supply zone and continue price bullish, just like this. Okay, so this is why we weren't able to. This is why we lost it, obviously. And you'll lose some and you win some. But in regards to our style of trading, we have sometimes 1 or 2 losses, and 4, 5, 7, 8 wins, depending on how many trades we take that day. So a loss isn't that great of a tragedy. Obviously, we just keep going, rinse and repeat. Okay, so let's go back to the 1 minute. I was taking a break here, and I was busy doing some other things, and then we see that price went all the way bearish here. Obviously, one of these supply zones would have worked out, and we would have been happy to look for the sells here. If you zoom out, you can see that everything is bearish here. Everything is bearish, so we're having bearish order flow and bearish structure pushing bearish. So I had another indication. I was looking for where price was potentially going to go and sell off from, right? We see that we had a break of structure here, which was an indication of a chalk. That chalk is indicating us that price on the higher time frame is changing bearish. So therefore, we are marking out our high that broke this low, right? And now we're waiting patiently for price to go back up to this area of supply zone, right? Notice that we're not just willy-nilly looking to sell and buy here. We're waiting patiently for price to get up to this high so we can continue price bearish here. I could have looked for buys here, although I wasn't because I was busy. All right, so once we got here, I think, yeah, I got a notification that we got I got a notification here where price tapped our supply zone. I immediately dropped to the 5 seconds. Now I want you to see something here. When the supply zone was tapped, notice what happened. We had a low broken right over here. This demand was broken, right? So my approach here was waiting for price to go bullish here. I wasn't looking to sell off right away. I was still waiting to see the behavior change. Actually, yes. Okay. So I took a sell-off here immediately, only because I had either this supply zone or this supply zone to work with. Right, if this supply zone just failed, then I would just work on this one, right, with a controlled risk, obviously. And we took a 1 whole percent on this one right over here. So we took a sell-off immediately, and trusting the process, trusting our process, right. We got the market going bearish here, right? We also had order flow switch. We had this high here taking out liquidity. This high was just a liquidity grab. It's not a full break of structure. We usually have 2 types of break of structures: a liquidity break or a clean break of structure, which is usually a full body candle close. Okay, and so this is what happened here. We saw price going bearish here. We saw how the order flow changed. Now, it's very important for you guys to understand when price breaks a high, right? We always want to ask ourselves, who broke this high? It was this low, right? Now you can see that we had a complete chalk right over here. So this is safe to say that we can take it because price is going bearish here. It's respecting the supply zone still. It hasn't broken above, right? So this is where we're looking to sell. Let me just play it here quickly. Okay, we were anticipating for prices to go bullish here and to tap this supply zone, although that's not what happened. Obviously, we saw more supply go bearish here, so we thought, okay, well, we need to adapt to our structure instead of waiting foolishly up here, and just adapt to the structure, right? Just adapt to this new break of structure. And this is where it told me there's more supply than demand. Obviously, demand is weak here, so then that's when we look to sell off here, and we now again interested in our process. The prices should go bearish here because of that break of structure. Once we had another break, and this confirmed to me and told me, okay, this is a complete sell-off here. We're in 2 trades now. We saw a lot of supply pushing bearish here. We also had another confirmed break of structure right here. I also I asked myself who broke this low. It was this high here. And then you can clearly see what happened here again. We had more supply, more supply going bearish here. So this also gave me more confirmation that we should be looking for sells. So obviously you can see that break of structure here. We're continuing this high's extension. We're just following the flow of orders from this high's extension right over here. And once price tapped us there, I was like, all right, we're a sell. We're good. We're going to hold this trade now. And then lo and behold, here's what happened. Price just barely tapped me out. I'm still in it, right? I mean, I look for a nice body break, close above so I can just get out. Normally, you should just risk what's within your zone here, right? But I do some things a little differently, right? I don't just completely sacrifice my trade and say to myself, okay, I'm out just because I'm this high into my zone. Because many of the times price just goes up like so, right, and then just takes your stop loss, right, and then continues bearish. So you guys are about to witness something here. When I play this, notice how price is going bearish so fast, impulsively to the downside. That's the sign. That was a clear sign here that this high here was just a liquidity grab. You can see that there is a structure right here, right? 1, 2, right? You can see there's liquidity hanging right above there. And price was just like, all right, I'm going to take liquidity, push price bearish. And now we are good to go and hold these trades for the rest of the way down. Now, I could have taken another sell based off of this area here, this supply zone. I didn't, and I'll tell you the reason as to why I didn't. It's only because we were coming so near to the area of demand. And when you're taking trades entries very close to the areas of demands or supplies, the trades are less likely to perform well, right? They're normally prices at supply or demand areas, prices start to zigzag like this and start to change the flow of orders, right? There's buyers and sellers are starting to change their orders in order to push price bullish like this. So if I was to say take a sell here, price could have easily come up here, taken me out, right? And then I would have been able to, lose this trade obviously too, and maybe profit off of these, and maybe break even and profit off of this one or something. So yeah, this is what happened, guys. We had that TP like this, so we had a pretty good darn Friday for these trades, and these were the only trade. Oh no, I took another trade, and I'll tell you about that one in a second. So we had 9.7% there. We had a 13% win there, 9.4%. So you can see how the percentages are stacking, throughout my trading day, and this is how I guess success in our Royal Blu FX. This is how we're able to consistently predict our success based off of our trades, right? So here, let me just go back on the 5 minute. Let me go on the 5 minute here. We were here now. This is later in the evening now. I normally don't trade. More than like 2 hours because we're scalping most of the time. I'm usually in the markets for about an hour, maybe 2 hours at most, and I'm out for the day because we've already made more than enough, money for us, and more than enough percentages for us. So we were able to just get out of this. Now these entries here were just a test. I was just having fun. I wasn't trading anything. I was just doing it for fun. As you can see, we would have been able to TP these two as well. and then let me see, this would have been a what, 5.2%. This would have been a 6.5%. Actually, my wife called me to go somewhere to the grocery store, so I missed this trade at 6.5%, so I could have milked that one. Let's go back here to the 5% here. All right, so coming back from the grocery store, I was like, all right, what the heck, it's Friday, you know, let's celebrate, right? I saw a break of structure here, and we saw that we had order flow pushing bullish. You can see that there's a break here, right there. Oops, excuse me. Didn't even mark it out, but that's our chalk. There's a break, another break of structure, right? And so I knew that prices should go bullish. They may go bullish and hit this supply zone or this supply zone. So I was really working out with my sort of well, structure, right? You can see just because we have one break of structure down here doesn't necessarily mean that prices should go bearish here. And so I looked at this area, this unmitigated zone here on the 5 seconds, right here. Let me just go back here. Right there. Okay, you see it right there, right? Unmitigated and unmitigated. So I had two demand zones that were unmitigated, and I tried just one of them. Now this is, you can call this luck or whatever, but we understood that since these order blocks, these demand zones weren't mitigated, one of them had to be mitigated, and one of them the market had to react on to, right? So we had a buy here. Once price tapped, we took that buy, had our risk just a little bit below. As you can see, we had these supply zones ready to go at our fingertips, and then this was going really slow because it was nearing on the New York close here. So we're just waiting for price to really tap our supply zone like this, and we exited the market. I believe this is a 5% over here. Let me see. It was a 5.1%. Yeah, so we closed our the trade here. We didn't do anything else, and then that was it. We called it in the evening, called it the weekend, and then I want to show you something here. If I was to take a sell here, which I most likely would have, based off of the direction and structure, as you can see here, price broke this low, right, and we were still respecting the supply zone. Price pushed bearish, and I would have been able to take a sell off of this supply zone here, like so, like that, right? Now you can see prices melting bearish here. All right, guys, so all I wanted to do was just share you guys the trades that we've taken this week. We've had, obviously, a successful week. We're looking for this Monday. Now, this is a Monday. We're looking to trade the New York session open at this Monday as well. So if you guys really like this video, please throw a huge thumbs up and definitely subscribe to this channel because we always give out free content, guys. I love you, and I'll see you in the next video.